And sorry, I just want to make sure I'm recording. There we go. Hey, everyone. Okay, so I'm Adina. I co-founded Immigrant Finance with my husband, Mauricio. We basically went through the whole process of trying to figure out and navigate the U.S. financial system when he immigrated to the U.S. from Ecuador back in early 2013. And it was just something really scary and overwhelming for us. It was really hard to find answers to a lot of our questions. We didn't know if he could have a bank account. We didn't know if he could invest. So those are things we'll be talking about today. We didn't know if he could have credit cards or how he could do it as an immigrant and how things would change over time as his immigration situation changed and all the uncertainties of that in the process. So we started blogging about this topic on immigrantfinance.com in January 2018, and it has since evolved to a platform where we've gotten to work with some really amazing people, many of you who are here right now listening in our coaching programs and in this Facebook group where we've been having monthly complimentary trainings for immigrants and their families who are seeking to learn about building wealth. On social media, there's been a lot of really awesome people there, many of you here that we've been connecting with, and recently in our podcast. So that brings me to our training for today. So first of all, if you are in the Immigrant Finance School program, which is our group coaching program that's really focused on empowering immigrants and their families to learn about managing money and investing and starting online businesses to increase income, go ahead and put hashtag wealth builder if you're in the program or if you've signed up for the program, so we can represent and you guys can be, leaders for others to look to, because you all have learned so much already or about to. And so please also extend support to other people new to this group who are new to these topics, and help answer questions in the chat. I would appreciate it. And if you're new to learning about investing and personal finance, you can put hashtag new. If you're looking for more support, you can put hashtag help and we will reach out and see if we can answer any questions for you. Yeah, I see we've got some wealth builders commenting. Hey guys. Okay, and I'm going to go ahead and jump into this training. So today is all about high yield savings accounts versus investing and weighing the pros and cons, making the decisions about how you want to be storing your money, because these are two different options. And for those of you who haven't heard this term before, high yield savings account, or the acronym HYSA, it's basically a type of bank account that allows you to get a higher interest rate. The interest rate is essentially free money that the bank is giving you as a thank you for letting them hold your money. And most bank accounts out there are not giving any interest, or they're giving such little interest, it's basically pennies. So high yield savings accounts are the type that many people try to go for because they have a more competitive interest rate. And many of those high yield savings accounts are in online banks. Online banks are often able to offer a more competitive interest rate so that you make more money off your money in the bank account because they are online. So they are not, they're not in having to pay for rent. They're not in a brick and mortar bank. They don't have to pay for as many customer service representatives greeting people, etc. So that's why they can often offer a higher interest rate. And high yield savings account are a really exciting way to start improving your finances, to really strategically make sure you're getting the most money you can for the money that you are going to have in a bank. The other thing we're going to be talking about today and comparing high yield savings accounts to is investing. So first of all, there are many types of investing out there. And we can think of it anything from investing in the stock market, either the US stock market or in international stocks and the international stock market, to investing in a business. Maybe it's your business or someone else's business you're investing in. It can also be investing in yourself, investing in your knowledge and your access to information that can help you grow as a person and make more money over time and grow a potential business, grow an idea, grow your intellectual property. Real estate is another form of investment. So there's many types of investment. For today's purposes, we're specifically speaking about investing in the US stock market. as a tool for building wealth, and we'll be comparing that to the high yield savings account. If you already are an investor, if you already own some pieces of the U.S. stock market by investing, put in the comments #investor, so we can help inspire other people to think about investing who are new to it and see that there's other people doing it, other people able to figure it out. This is not something you have to be a rocket scientist for. So let's inspire some other people. And if you want to be investing, but you're not really sure how, you could put #future investor, and you'll get hopefully some support from other people in the group can encourage you to get started. So why is this so important to be talking about this topic and comparing high yield savings accounts and investing? So first of all, we really all need to know how to navigate different financial products and know the pros and cons to building wealth for you and your family with these different tools so that you can be financially empowered. We want you to be in a place where you're able to make educated decisions, strategic decisions about how each dollar is going to be used and how that will fit into a plan to be building wealth, where you are really advocating for yourself with these tools and making sure you use the tools that are going to be best for you and your family in the long term, not just doing what a friend tells you, without researching or getting guidance on, or not just, being passive and not really taking the time to figure it out, just keeping things in cash or keeping them in a bank account where you're getting no interest at all. We definitely don't want to do that, because you all deserve more than that. You all deserve to have your money growing for you. And I see, yay, Christabel helped a bunch of people start investing. Awesome, in the past 30 days. That's so cool. Congratulations. Okay, and so with high yield savings account, this is a great way to make sure that you're getting the most for your money that you can in a bank account. To the extent that you decide you want to keep your money in a bank account, you want to have a high yield savings account so that you are getting the most possible and maxing out that possibility there. But I think you'll see through the training today that we're doing that it's not a real plan to be building wealth, because you'll see when we start looking at the numbers, we're going to look at some calculators, and I promise it will be fun. I can make calculators fun. You'll see that you're not really going to be making that much money, even if you have the best high yield savings account with the best interest rate. It's not going to be a real way to be building wealth. So ultimately, by just keeping your money in a bank, even with a high yield savings account, you would likely be missing out on building wealth, and also probably not even competing with the rate of inflation, which we'll be talking about shortly. It's also about making sure that you are not being taken advantage of in the financial system. If this is something you care about, please comment on that below, because this is getting political, and we're talking about immigrants building wealth here. So I want to acknowledge, this is a political act of resistance to even be in this group, and for you to be listening to this training and educating yourself more about finances. Seriously, so proud of all of you all for being here and listening to this and contributing to this community. Because this is so important, because if we don't know this stuff, you can't advocate for yourself with these powerful financial institutions that control the economy and can dictate our financial fate and the fate and legacies of our families, right? So just to put it a little bit in perspective, here's a statistic I read recently. This was a headline in the news actually this past week that was just terrible to hear. So it was a recent study that found Latinos and Blacks pay over 2 times more in bank fees than non-people of color do, than white people do. And one example of how this happens is something like overdraft fees. It can also be from minimum requirement fees of a bank account. All of these things that you really shouldn't have to be paying if you know how to navigate the bank system and advocate for yourself, and making sure you get accounts that don't have fees like that. So we want to be educated so that we are not adding to that statistic and letting banks and financial institutions put people in the community in that position, because that is just completely unjust. And it's time for more immigrants and more Latinos and more people of color to be knowing their rights and making sure that they are not being taken advantage of by banks. I also want you to think about making your money work for you and your family to be building generational wealth. We're going to be talking about 3 ways you can start shifting from being in bank account savings only to more investing so that you can be building wealth. We'll be talking about some mindset challenges that get in the way of that and how to overcome them. But first, before we jump in, I just wanted to tell you a little quick story about our experience on this topic and what many of the people in our community who we work with here are experiencing a similar thing to kind of make this more clear, because we all know sometimes stories make the point a little bit more clear, right? So first of all, before I get started, if you've ever been in a position where you feel like a bank hasn't treated you fairly, go ahead and share it in the comments and, you know, make a commitment to not let that happen again and get some support from other people in this community. So it was going on for us when my husband Mal first immigrated here in 2013 from Ecuador. We had no idea what we were doing with finances. I was a grad student at the time. I really knew nothing about personal finance. He obviously didn't know anything about the US financial system because he was new to the country. And we didn't know if he could do basic things as an immigrant, like have a bank account or have a credit card, or even be able to access those types of products. So once we were able to navigate that and figure out how he could get a bank account, we realized soon after that neither of us were getting really any interest in our banks. We were not making the money that we should have been making in the bank accounts. And I'm going to actually share my screen and kind of show you what this looks like. So let me just pull this up of what was going on here to give you an example. Let me pull this up. I'm a fan of sharing screens and making things super clear. So here you can see I have a simple savings calculator, and you can just Google like savings calculator. This is one of the first calculators that come up. And I want to show you what the interest actually looks like when you are in a bank where you are not getting interest. You're not even in a high yield savings account, which most banks are like this. Most banks are 0 interest rate or like 0.01 or something like that. So here I show what it looks like if you start in a bank savings account with just $1. This particular calculator didn't let me put 0, but assume it's just 0. And if you're going to start putting $200 in your savings account every month, try to save up, maybe you're saving for an emergency fund, and you do that for 10 years, and the interest rate is 0.01, which is a very common interest rate for bank accounts. I actually just looked up the current interest rate for Bank of America, and that's what it was. So we're at 0.01%. We're doing this 10 years. We're working hard, trying to do everything we can to get $200 a month in that bank account. At the time, that was very ambitious for us because of how tight our budget was. We were really living paycheck to paycheck, And if you look down, the actual $200 a month adds up over 10 years to $24,000. But the interest earned was after 10 years is $11.90. So I would guess a lot of you are in this situation and have a bank account that's something like 0.01%. And the reason I say that is because I actually ask our students in our immigrant finance school program every session, to go look at their interest rates, because a lot of people don't even know what their interest rate is. I know we sure didn't before we started looking into personal finance. And they'll often be very surprised to find out it's 0 or 0.01 or something like that. So this was, very, very frustrating to realize once we realized that we were just making, on a track to be making like $11 after all this hard work saving in our bank account plan that had such a low interest rate. And we realized we were not going to be making money. And this was not going to be a way to be building wealth. So that led us to want to just find a bank account with a better interest rate. So that's when we started learning about high yield savings accounts. So this is certainly a step up from a bank account that's at 0 or 0.01%. Definitely a better situation to be in, but still the interest rates are not that competitive. So right now, some of the highest interest rates in banks are like 0.5, about 0.6, maybe 0.65 tops. Like those are the most competitive. Part of that is due to how the economy is a lot lower right now, or the economy is down. So interest rates are down. So if we had, once we had switched to high yield savings account, let's say that was now and the interest rate was 0.5, everything else is still the same. We're doing $200 a month for 10 years. What that does is it now brings it up from that $11 interest to $603. So definitely much better, because now over that 10-year period, we would be getting $600 for free, right? That we wouldn't have been getting if we hadn't made that switch. So definitely an improvement to be in that place and having a better interest rate with the high yield savings account. And I see Nina saying it's ridiculous that banks have a minimum balance requirement. It's such a huge barrier. Absolutely. And, that's not something that you need to have. Like there's lots of banks that don't have that requirement. So advocate for yourself. And if you have a bank account like that, you have every right to close it and go switch to another one that doesn't have such a requirement, so that you don't get a fee for not having the minimum balance. So we talked about how in our journey, we eventually switched to the high yield savings account, and that definitely was an improvement. That was at the time a really big step in our financial empowerment, because we didn't even know we had that option and power to change our situation and to put a better account in for our bank to be dealing with, right? So it was a very empowering, but I think next we then realized that we're still not getting that much money. Like $600 over 10 years of hard work and saving, that's ridiculous, right? And so then we started learning about investing and realizing that was a much better way to grow our money than in a bank account, and that it just really wasn't worth all this time we were spending trying to make sure we were getting the best bank account possible, the best interest rate, the best high yield savings account. Because at the end of the day, it was only going to be like a few $100s over a decade, So we switched over to investing. By the way, if I'm having a lag or there's some issues with the text, someone please let me know. On my end, it's kind of freezing up. So if someone could let me know, that'd be awesome. Thank you. So we realized we had to switch to investing. And that was really like our plan, to put all of our energy into educating ourselves and learning everything we could about investing. So we started reading all the investing books and talking to financial advisors, seeking support, reading blogs. Cool. Thanks for letting me know that the tech is okay. And hey, Yesenia, welcome. So yeah, we just started doing everything we can to learn about investing, because we had this wake up call that we weren't going anywhere building wealth with our bank accounts, even if they had the highest interest rates possible. And it took a little while to get there. Like I definitely had a period where I was like every month switching to a different high yield savings account to get the maximum interest rate. And I just realized that was such a waste of time and energy, because all that time I was spending should have just gone into investing. We would have made a lot more money. And I'll show you why in a moment when I get to my next calculator on investing, right? So actually, let me pull that up to show you guys. 1 second. So we're going to do the same numbers with starting basically at 0 when we got started. We're going to be doing it for 10 years is the period we just looked at in the bank account. This time, instead of 0.01 or 0.5 for the interest rate that's available in banks, the interest rate when you invest is more like 8%, because in the total stock market, the average rate of return over the past 100 years has been between 7 to 11%. And so a conservative estimate average of that is 8% is what we go with, which is so much more significant than 0.01 or 0.5, right? And you'll see why in a second what that does to the numbers. And then here in the calculator, I put in to invest 200 every month, just like we were doing 200 every month in the savings account. And when you click calculate, look what happens. So instead of making $600 over 10 years with the 0.5 interest rate in the bank account, we've now made over $12,000 in interest by investing, just by doing investing instead of a high yield savings account. And that leads us to have now over $36,000 instead of being at around $24,600. So huge, huge difference that you can have just by switching which financial tool you're using. And that's why you really want to be educated and know about which you're using and how to do them, the pros and cons, so that you don't miss out on this $12,000, right? Like that's a lot of money. And that goes up even more the more you invest. So like, let's say you're able to increase it to 500 a month, which I know is really difficult for a lot of people. But let's say you pick up some side hustles, you get really committed to investing and you do 500 a month, like that's now $30,000. It's crazy, right? And this is just the numbers speaking, right? This is just a calculator. You can type in Google investment calculator, and this is one of the first ones we'll see. So I hope that makes it clear, like why this really matters and how we're talking about making sure you don't miss out on really thousands and thousands of dollars just by picking the wrong tool and not taking the time to learn more about finances. And so in our experience, this was really, really important because it allowed us to develop a long-term strategy to building wealth. It allowed us to have a plan around investing. By committing to this work, we were able to build more confidence in investing. It can be really intimidating at first, but it is something I promise anyone can figure out. It's not rocket science. And many of our students have been able to do this and be the first in their families to be investing through support in our Immigrant Finance School coaching program. And ultimately, in addition to having a plan and more confidence, really the transformation of switching from high yield savings accounts to investing for us was just having more sense of security, having more peace of mind, knowing that you have a plan and a path how to get to your goals for building wealth, how to get to your goals, planning for retirement. You can sleep better at night. You're going to have more options and choices. You know, you may be on a path where you can more sustainably help others in your family and build generational wealth to pass down to your family. So it's really, really important. And, you know, I will say, just to be clear, I don't think I mentioned this yet, like you don't want to completely do everything in investing because you need to have some money in cash, particularly for emergencies. So it is good to use high yield savings accounts for emergency funds, to have money available when you need it, because it does take a few days to take money out of your investments because of waiting for the transactions and all that. And there also can be penalties on some accounts, some types of investment accounts, for taking money out. Not all accounts. There's different strategies with different types of investment accounts to consider. But yeah, so that was our story basically. And now I wanted to get into those 3 points I was mentioning about how to get through some of those barriers with getting into investing and making that shift, and talking about some of the pros and cons of investing versus high yield savings account. While I get started, if you have any questions on anything I covered, please put them in the comments and I'll do my best to address them. And I hope that this is all making it more clear for you all on considering the differences between bank accounts and investing. So the first of the 3 things I want to talk about with the pros and cons is this idea of security and safety and assessing risk, because a big misconception that people have, particularly in the immigrant community, where a lot of people or their families are coming from countries where banks can't be trusted, and where certainly investing it can't be trusted and is not seen as something that can be safe. There can be a lot of fear around investing, and banks, fear of banks as well, right? So I've talked about a few times how when Mao, my husband, was growing up in Ecuador, there was an economic crash. They had several presidents in 1 year, and the bankers left and all fled to Miami, and they took everyone's money with them, and everybody lost their life savings. So in general, there can be a lot of fear of banks, you know. So I know it can already be a hurdle to get family members to move over to even a high yield savings account, or even to open a bank account if they've been living on cash only. And I see Chris Wells' comment. Thanks for adding. I highly recommend keeping an emergency fund for a rainy day for investing. I agree. Awesome. Yeah, definitely important. We don't want to put everything in investments. Yeah. So where was I? So people, you know, there's already a lot of fear to even just access bank accounts, and Latinos and immigrants are are known to be one of the populations in society that is most likely to be what's called unbanked or underbanked. So there's a lot of people not even using bank accounts that have zero interest, and so I understand it can be a hurdle to even get to the banks and then even get comfortable in a place for the high yield savings account. But once you're at that point, I want to talk about like comparing the safety and risk factors of the high yield savings account versus investing, because there's a big misconception that investing is not safe, that it's like gambling, that it's super risky, and that your money is better off in a bank account. And I want to tell you why that's not necessarily true always. I mean, it depends what kind of investing you do. We do not teach the kind of risky investing of trying to predict the market and do day trading. That's not what we're talking about. We're talking about like long-term conservative buy and hold investing. But so in a bank account, money actually loses value over time. The reason is because of something called inflation. Inflation is how the value of the dollar loses value over time, right? So that's why buying like a candy bar, 100 years ago may have been, I don't know, 5 cents or something. I'm not sure how it costs, but something very cheap. And now it may be like a couple dollars. That's because of inflation. And the rate of inflation on average is about 3%. That's how much your money is losing value every year. So if your money is all in a bank account that has even the highest interest rate of, let's say right now it's like 0.65 maybe, that is still far less than the rate of inflation at 3%. So that's why in a bank account, you're basically guaranteed that your money is losing value compared to the rate of inflation over time. And the only way to keep up with inflation or to even beat the rate of inflation and have your money grow and work for you is through investing. And again, there's all these different types of investing, like we talked about in the beginning of the training, from real estate, businesses, stock market. We're talking about the stock market kind. And banks are also not necessarily safe and secure always, because, if you think about it, in many ways, they're using you and they're using your money for selfish reasons, and I mean, that's how the capitalist system works, right? But what they do is banks literally make money because they loan out the money you give them and make more money off it. So like it's not like your money's sitting there in a drawer somewhere when you deposit in a bank. They're cycling that money and loaning it out, right? If you need to withdraw it, they're going to give you it back, but it's not the same dollars that you first put in. Like it's all cycling. So anyway, I don't want to go down a rabbit hole, but basically they are making money off of your money when you're not, right? Like your money's losing value because of inflation and not being invested, but it's in a bank account, and they're making money off it by giving out loans. And they're also making money off of your money in the bank accounts by having these fees we've been talking about that could often take advantage of historically underrepresented communities. Another statistic I read recently that according to Bankrate, banks are going to be collecting more than $30 billion in 2020 in overdraft fees alone, more than they ever have before. So this is what we're talking about. Like, do you want to be in a position where that kind of stuff is what you're facing in a bank account, or do you want to be in charge of your money growing and having it work for you? And again, it is definitely important to have emergency funds available in a bank, primarily for ease of access so that you can quickly get it. And that in the short term, it's not going to go down if you need it when the market goes down, because the market does go up and down in the short term, right? But overall, although there is some risk in investing because the market does go up and down over time, overall, on average, the total stock market has been growing indefinitely over time. In the US, it's the strongest economy in the world. And over the past 100 years, it's grown at a rate of 7 to 11% on average. So that is that free money that you're making by investing is how your money is growing in the market. Compare that again to the bank account we've been talking about. that's something like 0.6 interest rate. And the vast majority of bank accounts really more like 0% or 0.01% or 0.0001%, right? So investing is the only way to make sure that you're not actually losing your money over time, you're beating inflation, and you're having your money work for itself to actually build wealth. So for those reasons, that's why I would argue in many ways it's actually more risky to have your money all in a bank account and not be investing some of it. The second thing I want to talk about is the overwhelm that comes with investing. It can feel so complicated and very difficult to figure out. There's all these fancy terms. It's like having to learn a new language, right? And it's very intimidating. You think of people on Wall Street and financial advisors who are these specialists in financial transactions and all of that, and it's hard to feel confident comparing yourself to people like that. But let me tell you, investing does not need to be that complicated. It is overcomplicated for a reason, in my opinion. There's a lot of industries that can make a lot of money off of telling the story that investing is complicated, because most people don't learn how to invest on their own. And then what happens is they end up having to pay a financial advisor to manage their investments for them every year. And they're paying them a yearly fee every year for the rest of their lives. And that ends up being thousands and thousands of dollars. And there's been studies showing that that can cause you to lose out on sometimes hundreds of thousands of dollars in your investments, because that money, instead of giving it to the advisor, you could have been investing that and making more money, right? So why not just learn how to do it by yourself, instead of having to pay an advisor those fees? And letting your money sit in a bank, and do nothing and just taking a more passive approach, that definitely is easier. Like, I'm not gonna lie, that is less overwhelming, right? But just think about how you're missing out on these thousands of dollars that we saw, like the example in the calculator of the $12,000 you'd be missing out on, but from just switching to high yield savings account to an investment account. And investing actually can be quite straightforward, especially if you're doing a kind of conservative approach to just investing in the stock market altogether. The hard part is not actually buying the stocks and opening the account. The hard part is the budgeting and learning how to budget effectively so that you can commit to investing consistently every month and being intentional about it, and budgeting for your goals so that you're able to invest every month at the amount that you want to in line with your goals. So that's the hard part. But that is also something that doesn't have to be super overwhelming. With guidance, it's something you can figure out. And that's exactly what we support people to make a plan with in our Immigrant Finance School program. So if you're interested in that, feel free to reach out to us or make an appointment to chat, and we can see if it's a good fit to support you. The last thing I wanted to talk about, comparing high yield savings accounts and investing and kind of getting over these blocks that can get in the way of making that shift to investing to build wealth, is fear and money mindset. So money mindset is this idea of the stories that we have about money that can be negative, that can be passed down to us from family members growing up, from conditioning in society, from stuff we hear on the news. We all have a lot of toxic and negative money stories subconsciously that we don't even realize that we have to actively often work on in order to transition to building wealth, because it's those voices in your head, it's those insecurities that can come in and try to keep you small and keep you where you are, and to not be investing and not building wealth. Things like, if you've ever had a thought, I'm not like those kinds of people. I'm not the kind of people that invest, or, I can't figure this out, or I don't deserve to do this, or I won't be able to learn how to invest. Like, those are all limiting beliefs that come from money stories and money mindset challenges and really fear, right? And that's why we also have a lot of stories about investing being like gambling and bad, and that if you want to make more money and you want to have your family in a more stable place, that somehow is you being greedy or sleazy. But that's not true. There's nothing wrong with wanting to take care of your family and to be in a more stable place, a more sustainable place, so that you're able to help others more, so that you're able to not have to focus on yourself so much, and you can contribute to your community and be in a sustainable position to share money with family members who need it, etc. Right? So this is all stuff that is important to work on in order to get those barriers to investing that come in the way. A lot of them are mindset related. And there is, like I've been saying, a more conservative approach to investing, long-term investing that's not about gambling. It's not about trying to play the market and get the hottest stocks. It's about having a consistent plan that is simple and just committing to it. It's more about making sure you consistently invest every month, and being in a place where you can build stability for your future, for your retirement, for your children, and for future generations. And having that desire does not make you a greedy person. It makes you a loving person that wants to take care of your family and also yourself. And unfortunately, we can't rely on others to be doing that, so we can't rely on the government to do it, especially in the immigrant community. I mean, there's been so many injustices from the government, and a lot of members of the community aren't eligible for getting things like Social Security later in life. So this is a way to empower ourselves. It's an act of resistance to be able to build more power in the financial system and have immigrants have more of a say in the economy, right? And having more options in their lives, right? So I want you all to start seeing yourself as investors, to take a look at your bank accounts, see what the interest rates are. If you are not getting any interest at all, consider a high yield savings account, especially for your emergency fund savings, for your savings. And then think about investing. You can totally do this. We're here to support you. This community is here to support you. And you will be an owner of the U.S. economy. You will not just be someone who just works for others and gets paid from an employer, or for clients you work for, but you'll be someone who's owning the economy, and you're an investor, which is a very powerful place to be in. So those are the three things that I want you all to remember when it comes to comparing high yield savings accounts and investing. And it really comes down to number one, thinking about safety and risk and security in a different way. And once you understand more how banks work and how investing is the only way to beat inflation, and how it's actually in some ways less risky to invest than just to rely on banks, because your money could be losing value in just a bank. Second, the investing can be more simple than you think. It doesn't have to be so complicated. And third, to start facing fears and working on money mindset so that you can get to a place where you're investing and building wealth for you and your family. So I hope this was helpful. If you have any questions, please put them in the chat. And if you enjoyed this lecture, if this was a helpful training for you, this is a great example of the types of topics that we teach and go much more intensely in our Immigrant Finance School program, which is our 6-week personal finance and building wealth group coaching program for immigrants and their families, where we also work on building online business ideas to increase income and really making that shift together from surviving to thriving to build generational wealth. So if you're interested in learning more about that, go ahead and check out immigrantfinanceschool.com. Our next round of students is going to begin April 18th, and we actually only have a few more spots left before we sell out. So go ahead and apply. We'd love to talk with you about it. And thank you all so much for attending this training. If you have anything to add, any resources for the community, please put them in the chat and share with others. We definitely want to all be learning together as we go through this journey. So thank you all so much, and everybody take care and have a good night.